Welcome everyone to today's webinar. My name's Heidi Lenffer and I work with the Ecotone Partners team as a research analyst. Today I'm calling in from beautiful Darug country, which is in the Blue Mountains, and I want to pay my respects to the Darug people as the traditional custodians of this land and extend this respect to elders past and present, as well as to any First Nations people who are joining us on this call today. So it's been my great pleasure to be spearheading this 5-part webinar series on gender and climate in partnership with the Department of Foreign Affairs and Trade, who are doing great work to mobilise more investor capital into gender lens opportunities in the Asia Pacific region. Just a note, unfortunately, our moderator for today's session has been pulled away by an unexpected last-minute commitment. So I'm stepping in to take the reins for what should be a very thought-provoking conversation. The title for today's webinar is Gender Lens or a Tiny Monocle, why we need a bigger vision to drive gender equality at a systems level. And our speakers today are all highly experienced gender lens investment practitioners, as well as gender equality advocates who have been at the forefront of driving this practice and really living out the challenges that we'll be discussing today, from box ticking exercises to a lack of well-designed investment products, to a lack of appropriate data to inform robust analysis. We're going to be covering a lot of ground today. And if you're new to this subject, I don't want that to put you off, but I want you to feel confident, take in as many of these ideas as you want, and just let them start to percolate. The research and conversations that I've had in the process of organising today's session has really reshaped my own thinking on this topic. So I'm super grateful to the speakers today and the work that they've done. And I've been learning a lot about how this practice of gender lens investing fits within the wider movement of gender equality, which is, of course, why we'd be doing any of this at all. And if I'm honest, at the start, when I had a surface level understanding, it all seemed like a bit of a rosy proposition, you know, that investing in gender diverse teams is not only morally sound, but also has a financial performance advantage, increases innovation, lowers risk. It all seems too good to be true for that to be the full story. Now, as it turns out, all of those commercial advantages that we've been covering in previous webinars are entirely true and evidence-based. But what I've been learning is that this narrative that I've been absorbing was glossing over some more uncomfortable questions that inevitably come hand in hand with shaking up an entrenched power imbalance. So our speakers today have spent a lot of time mulling over some big questions and have strong opinions about why we need to expand our vision for gender lens investing. So to introduce them, firstly, Joy Anderson. Joy is the president and founder of the Criterion Institute, which is a hugely influential nonprofit think tank based out of the US, which focuses on shaping markets to create social and environmental good. Joy's work with the Criterion Institute has been nothing short of field defining. She's helped launch and grow the gender lens investing field internationally, and which has also earned her the unofficial nickname of the godmother of the system level approach. Joy is also a serial entrepreneur who has co-founded an investment firm called Good Capital, which backs innovative ventures creating solutions to inequality and poverty. Joy has been ranked as one of the 100 most creative people in business. And on top of this, she holds a PhD in American history from New York University. So welcome to the conversation, Joy, and thank you for your work that has made this conversation possible. Now, Vicky Lay is a partner and head of impact investing at Artesian Ventures, where she's been a central architect of the firm's impact strategy for directing capital towards social and environmental outcomes. Vicky is also a serial entrepreneur who co-founded Zookle, an education tech startup which was backed by Silicon Valley Venture Capital, as well as founding Syndicate, a women's economic empowerment nonprofit focused on closing the gender pay gap. Vicky has been recognised in the 2017 Forbes 30 Under 30 class for finance and venture capital in Asia, and she serves on the boards of nonprofit organisations fostering youth empowerment and entrepreneurship. So thanks so much for joining us, Vicky. Finally, Mary Delahunty. Mary is the founder of Seven Advisory, a consultancy firm working with companies to help them progress their purpose and impact. Previously, Mary was the head of impact for the super fund Hester. She's passionate about authentic progressive capital and has held senior roles in financial services organisations for over 15 years. Mary was also a 2015 Churchill Fellow, awarded for the completion of international research on equity for women in pension systems. She has chaired a ministerial advisory council for gender equality legislation in Victoria, and was a former mayor, deputy mayor, and elected councillor for an inner city municipality. Mary is a thought-provoking leader on gender lens thinking, and she's asked me to acknowledge that it was Joy, in fact, who turned her mind to the system level approach. But Mary is fast carving out her own authoritative voice on this subject, and it was in fact a conversation that I had with her that inspired today's webinar topic. So thanks for that, Mary. It's great to have you with us as well. So Mary, starting with you, our webinar title was inspired by an article you wrote a month or so ago, which starts with the opening line, "Can we talk about gender lens investing? Because it sounds delightful and purposeful and important, but I fear the execution is not so much a lens as a teeny tiny monocle." So for the purpose of setting the tone for today's conversation, Mary, could you start by giving us your definition of gender lens investing and then some insights into why you felt compelled to pen that article?
Thank you, Heidi. Hi, everyone. That's such a really very powerful sort of opening when you announce who everyone is, and I feel very overwhelmed to be in such a esteemed company. So thank you for having me today. And I want to acknowledge I'm on the lands of the Bunurong people today. I'm very lucky. It's a sunny day here in Melbourne, which is, rare. But their traditional greeting is Womanjeka, and Womanjeka actually translates as come with purpose, not just hello. So that's kind of fitting, I think, for today. And when you read that start of the article out, it was an extract from a speech given. So it does sound a little bit cynical when you read it out loud. And maybe that's where it's coming from, honestly. I do hear, I think, a lot about gender lens investing. It's a term that's crept into the vernacular of investment quite easily, but it does bear some picking apart as to what that actually means and what it means to see something through a lens, as opposed to doing small activities that may have a gender element to them. And there is a difference. And really what I was trying to get at in that particular piece in the speech that it came from, because it was given to institutional investors, was what is our role in moving capital behind a financial risk? So you'll remember those of us, I note that Vicky's in the under 30 club, so maybe Vicky doesn't remember. Some of us remember when Mark Carney had a moment, in the environment movement, and it took someone of Mark Carney's gravitas speaking about what it meant to have a financial risk at an existential level when you're a complex portfolio holder. So when you're a large institutional investor and you basically own a part of the economy everywhere, what does a financial risk mean, like the climate challenge? And it seems obvious to say now, but there was actually a pivotal point in the climate and understanding of climate disaster mitigation and understanding of financial risks. And gender as a risk has not had that moment. And it has had many voices around it calling for that particular understanding, but it has always led to actions, I think, at a small level, more in the commoditisation of women's space than in the can you see the portfolio through this risk space. And to answer your question, which was 45 minutes ago, so people have forgotten, I think gender lens investing means seeing every decision that you currently make with a gendered eye, not understanding that there's a gender problem and fixing it in a tiny way over here. And that's the difference.
Thanks, Mary. And it's not saying that fixing it in tiny ways are not necessary or invaluable, but they definitely need to be sat in perspective for what the wider...
I think it's a gender approach to impact. Is it a lens? Nope.
Thank you. Now, to drill down more on this macro view that we need to have, Joy, could you, I think, to illustrate the system level thinking, which is a term that some people might not be familiar with, and the whole conversation today is kind of hinging around an understanding of that term. Could you just make sure that that's really clear for us for what that means and why you think thinking at this level is super critical?
Yeah, so I mean, we've been tracking, I'll just come back to reinforce a point that Mary made and then look more broadly. I'll just bottom line it. At some level, if I'm in a conversation, this teeny tiny monocle that Mary talks about, if I'm in a conversation with a public equity analyst, at some point, he or she will stop me and say, I'm really interested in this whole gender lens investing thing, but I don't buy women on boards. And I'm sort of dumbfounded. I'm like, well, why do you have to buy women on boards? Right? Certainly we don't want to buy women on boards, but like buy the idea of women on boards. Or there aren't women leading companies in my sector. So part of what happened in the field of gender lens investing that I think Hesta and Mary in her leadership there actually got underneath was, rather than looking at gender as an identity and sort of looking at only representation, are there women here? Can we find a woman in this company? Are women present? An important question, a human rights question, often a representation question, in general. I don't want to minimize it. It's just not the whole picture. And so being able to see gender not just as individual representatives of women or gender minorities or others in companies, but rather seeing it as a pervasive systemic risk, makes gender more relevant to finance overall. It takes it out of a single indicator of, are there women here, into looking at a broader system. So the analogy that you and I were playing out before, and again, this is we always start with a parallel to climate, because everybody's figured out climate, and so, which of course isn't true either, but so we make these analogies. And so it's sort of like if you were a climate investor and you thought what you were going to do is go into your backyard and plant a tree, a single tree, maybe a grove of 3 trees, and tend those trees and make sure those trees don't wither, give them fertilizer, like do everything you can to support those trees. Meanwhile, the watershed is disappearing, acid rain is falling, and hurricanes are blowing up the trees, right, on a regular basis, and typhoons and the rest of it. You would think that's silly to say, but I have 3 trees. But we do the same thing with gender. We look at it at an individual level, identity level of, this is the experience of a woman, or this is my experience as a woman. Again, an important individual experience. Gender, though, is not just about the individual experiences. It is a system of power. It is a system of norms. It is, honestly, not to go too far into gender theory, but we are using the word gender lens importantly. Gender is about both men and women and a spectrum of other identities. Gender is not only about women. Gender is about the power dynamics between all genders. And so I think what's important to look at this is sort of move it from the individual experience to then looking more broadly, where you can say, if there isn't adequate protection of women in the workplace who are experiencing gender-based violence because gender-based violence is condoned, that's a problem. Not whether or not it happens to my individual woman that who works next to me, but it's a systemic problem if people don't feel safe in the workplace. So all of this sort of moves it from one-off experiences or individual representations of women into a broader systemic analysis.
Mm.
Did I get out of a tiny monocle there, Mary?
I reckon you had us way up high.
Thanks, Joy. So I think, to bring that, that was really illustrative of the issue. So thank you. to bring us over to where this fits into the investment world and how we can move it forward using investment products. One of the issues that we've been discussing in the prep for this webinar is that there's been a necessary framing around commercial and financial performance. And the case for investing in women has tended to be couched in this upbeat framing for the reason, for the reason that it is very much rooted in evidence. There's a very strong commercial case for investing in women, but it's also been a strategic choice to keep a more positive frame around a very complex issue. And Vicky, I was wondering if we go to you with your experience as a leading fund manager and designer of product at Artesian. You've mentioned previously how the financial performance framing clearly serves an important function. Why do you think this approach is valuable?
So I'll just sort of couch all of that first and just say it is a limited framing. So I do agree with my sort of fellow panelists. So, we sort of discuss this offline. But I think just for myself, being as unapologetically impact first, when I started my career, that was sort of like my flag that I sort of flew as soon as I could get into a boardroom, right, or in front of an LP or an investor. But what I found is as I was raising capital, trying to launch funds, trying to build product, or even from an entrepreneur right now through to fund manager where I'm actually allocating, it was just an interesting realization that the market wasn't quite where I wasn't quite ready to receive my message and my passion. And so I had to really adapt my story, adapt my my language to suit the audience. So that's sort of why I can understand when someone says, okay, financial performance is an important framing because like you said, the research indicates that corporate and government structures they do benefit. They do benefit when you actually are have inclusive models. But I guess for us, why it's so important is, well, this conversation is so important to me as a fund manager, is because we're all trying to figure this out, because there are us in the industry who really would love to lead the systems change. But how do we get the institutions to get along there with us, the LPs, the investors, to also be there with our levels? So I guess this conversation is where I think we would like to get to as an industry. Not there yet. That's why it's really important to have people like Mary and Joy out there making sure that they're advocating for this, pushing standards, and then if we can as industry participants, we can all in our own way, every dollar counts, move the needle, do what you need to close the deal. And let's all try to make sure that we together are committed to making sure our strategies are getting deeper in terms of what I like to call gender impact alpha, increasing more than just the your lens on risk return metrics and looking at impact as your North Star.
Yeah, so there's a reality that you're dealing with where the market's not quite ready for where you want to be and the product you want to create. So it's going to be a bit of a lag in terms of us catching up in terms of the product out there. And Joy, what has this focus on financial outperformance meant we've had to sacrifice or downplay in terms of other important aspects impacting upon gender equality? What does that mean? And what has been the downside of that for you?
Yeah, and again, I really want to honor Vicky's point. I think we are all working in complex systems of power and we make all kinds of choices. And my job is to continue to push to say we might be able to ask for more, but I also know there's lots of constraints in context of what people can raise and win. So I think it's realistic, and I think the sort of business case for investing in women has been important. Couple traps that came from it though that I actually think in some ways it affected our ability to have impact through gender lens investing, but even more importantly, I think it affected our ability to be relevant in finance. And so part of what happened, as I named before, is over the last 15 years or so that this has really grown as a topic. The role of the business case for investing in women or looking at women on boards and the sort of upside from diversity meant that we did frame things in a positive way. And you had to prove impact alpha, right? You had to improve a gender alpha. You had to prove that women's participation caused the investment to do better. That was a burden of proof that is unrealistic. If by saying women and other gender minorities who have experienced systemic discrimination are going to rise from the ashes and overcome that and outperform, created some bizarre things in the market, in the fields of microfinance, in investing in women-led businesses, where all of a sudden they had to prove that they were better. Now, and again, gender dynamics around that are real. The second thing that happened, so one is it became a burden of proof that I think is, why couldn't we just do as well? Nobody has ever commissioned a study to determine if all male boards outperform. Or if you have a man on a board, does that improve your, we have never done that. I would like somebody to commission that study to say, do having men on boards improve? But like, we had to prove that not only were we useful, but we would disproportionately get to outsize. And single-handedly, Wharton at some point sort of challenged the whole hypothesis because we couldn't prove that having a woman on a board was the causative factor of the change. I mean, that's just ridiculous, right? So the second piece that is important is that it meant there were some things we couldn't talk about. So if you were trying to prove the sort of strength of women, the story of women's economic empowerment and their participation in the economy, you couldn't talk about exploitation. You couldn't talk about gender-based violence. You couldn't talk about the sort of constraints in women's lives caused by the underinvestment in the care economy. You couldn't talk about destructive gender norms. You just had to say, look how strong women are. And so there literally became a constraint in the market, in the field, to say, let's not talk about it. And I do think at some level, investors care more about risk than they do about upside at some level. We all want to make money, but we also want to not lose money first. And so being able to sort of parallel to climate, really look at gender inequality as a systemic risk, puts it in a different category, allows us to then say what companies are exposed to that risk more. It allows you to hold up. There's an investor here, Catherine Collins at Putnam in the US, who's just brilliant at identifying leaders who she doesn't think will adapt to cultural changes. And there are cultural changes happening all the time. And so she signals out leaders and says, you're not adapting. You're not realizing that the world is changing. You are assuming that your place of privilege will be in place forever. And if you're not looking out and saying, all right, the workplace is changing, the composition of workers are changing, you gotta be ready to change with it. We need to figure out how to look at those leaders and say, there's a risk coming. There's a regulatory risk coming. There's a shift in employment practices. Are you ready to face those kinds of things? And really name it as a risk, not just ask us to prove that there's an upside.
So let's delve more into that idea of gender as a systemic economic risk that needs to be elevated on par with, you know, how investors think about risks like inflation or climate resilience. These risk impact investment outcomes, these risks impact investment outcomes as do gender considerations, but yet we, as you're saying, we relegate gender considerations to more of a narrow screening tool. So Mary, in your experience in the institutional realm, how do you think the investment community is, how well are we tuned into that concept?
We're tuned into the concept of understanding risk at a broad level. We're not tuned into the thought that gender sits at that level. And there's a lack of data, yes, which everyone in investments, that's our go-to saying. There's a lack of data, but there's a lack of willingness to capture data as well. And some of this comes to the difference between, there are many, but let's say one of the differences between the climate analogy and gender is entrenched privilege. Like gender's not as climate, we can all kind of find our way in and find our place in. Gender equality is not a zero-sum game. I don't buy into the whole grow the pie and everyone gets more pie. You grow the pie and we've still got the same slice. It's just maybe the pie is bigger. So there is a hesitation to see gender in a way that would genuinely work into that concept of the way in which institutional investors can actually filter risk and understand what to do about risk. And I've worked in some institutions that are genuinely, especially the super fund, genuinely trying to enact and take action on in their, asset classes, in their portfolio strategy on gender as a risk. And we all get caught in the action bit. We were all like, so what should we do? Like, what is it? And it's just so easy to come back to, well, there's an arbitrage position with women-led organisations in private equity. So there's somewhat of a lack of willingness, there's somewhat of a lack of understanding to cascade it up. I don't know if cascade's going that direction actually, as I said it out loud, but anyway, you know what I mean? Chunk things up and take it down again through the portfolio. There's the patriarchy, and there's a genuine kind of, well, why would we do this? And so, the job in front of us, as Joy said, it's everything. It's everything that Vicky's doing to design products, to change language, to morph. And it's everything that others are doing to say, get up higher, see it through a different way. And it's not going to be easy, but that's where the concept deserves to sit.
And Vicky, in terms of where do you think help can come from in the most direct manner in terms of from the investment community, in terms of what you're trying to achieve at Artesian and moving that needle slowly forward and making, the kind of products that you do want to create in the future, where do you think levers for change can really come from that would help you get there faster?
I would say, that's a huge question. But, I think the most important thing that would help fund managers or help people who are trying to design products and trying to get money where it needs to get to, regardless of what SDG you're working on, it's about having a long-term view. So we personally like to partner with, with long-term institutions where they do have a bit more of a systems approach. So if we could try to be more long-term in our thinking, and also, I think, be patient with the process of getting better. So the entire industry is trying to figure this out. We're not going to get there on our own. It's about working together and sharing with transparency about where we're at in the process. And we really enjoy the back and forth dialogue. We've been we've been in a lucky position to have really great investors. A lot of the big super funds are part of our LP base. And for example, we recently launched our female leaders fund. Okay, so it's a we sort of launched with like a 100 million mind, Series A and Series B checks for women investors, women entrepreneurs in the Asia Pacific region. And this is the first of its kind. First of its kind for the region. If you look at all of the gender lens funds, sort of looking at our stage, we are actually the largest, and we were the first to actually get that launched. And it was just so interesting with the way that we got that done. We really thought about it from, how do we actually explain this in a way that you can't argue with the thesis. You can't argue with, what we're trying to do. And I think it's, I guess that's how we can sort of help, is we can try to bring people into the conversation to create a language that we can all adopt, understand, similar to, I guess, climate. I know we haven't solved it completely, as Joy said, but just trying to get to this place where there is a baseline in understanding, a baseline of education and languaging that would really help the way we can move the industry forward and try to see more, female-led funds, more product being created, because that's the biggest issue we're seeing in the region is there is a dearth of product. There's a lot of demand, and actually a lot of demand. So I'm actually based in New York, but as you can hear from the Australian accent, I'm born and bred in Sydney, and I'm very passionate about trying to move capital to the region. And there's lots of demand for it. It's just really about creating product and making sure we have lots of different versions, different perspectives of how to actually tackle this from whatever corner of the room you are coming from.
Joy, I can see you're nodding your head there. Did you have something to add?
Yeah, no, I think there's a couple threads of Vicky, both, but what you and Mary have been tying out. One, I just really want to celebrate what you've gotten done in the region, full stop. It couldn't be in greater agreement that we need more product in the region. I've been advocating for more gender lens products in Australia and the Southeast Asia and the Pacific for, I don't know, a while now. And I think the key though is partly where you named, Vicky, of the need to get to a clear thesis. And that's part of the challenge in representation only, right? Simply saying, and you can come back to this because I know you actually have a really strong investment thesis underneath the representation. It's not just women-led businesses, that is an investment thesis. So a couple things that I think are important about how we build investment theses, and with DFAT support, we've actually done a lot, particularly in the Pacific, looking at the importance of building investment theses that have a gender lens. Because at some point, what investors do, to radically oversimplify, is they look out to the future and say, given what I know now about opportunities, which of these opportunities will capture that future that I believe might happen? And that's what we make money in the future. No investor makes money in the present. And so one of the challenging things about gender is that we don't yet have a way to describe the future. We're sort of stuck in describing things now. And so we turn it into a screen now, versus saying there are things changing. Gender patterns are changing. The Australian government just changed. There'd be a set of people who didn't see a change in government happening that would lean more towards gender issues. Okay, you could have seen it coming, and then saying that the sort of shift, hopefully, in regulatory changes that come with that might come soon after. So at some point, our ability to look out into the future and see things clearly is what makes us either good investors or bad. I mean, that is like one of the clear delineations. And so part of the question is, how do we get to, I think one of the easiest ways to build product in gender lens investing is to have a clear investment thesis about the future, to have a clear sense of what do I see as patterns? Okay, for the love of God, where do you see the care economy going? Because there are some opportunities in the care economy that people are missing, right? And so what's shifting there, right? How do we look at our recovery post-COVID with a gender lens? And how do we invest as if that mattered? Because we're making a bet on what matters. So part of it is, one, how do we have a future? And then the second thing is making sure that when we're looking at data, we're looking at data, both company level data, but also industry level data and country or regional data. Because gender doesn't just happen at work. Women aren't just at work. Power dynamics don't just happen at work. And so there is actually an abundance. This is where you can tap into the amazing civil society organizations within Australia and Southeast Asia and the region more broadly, who have a ton of data about the contextual realities of what's shifting. And so how do we draw in data sources that aren't necessarily only company reporting in the same way we do with every other industry and every other sort of factor of investing? We would look at environmental data. We need to do the same thing with gender. We need to draw in data, because I would challenge, Mary, and I'm curious what you think about this. I think the challenge is as much analysis as it is data. Because the reality is we actually don't know how to analyze the data that we have and figure out what its materiality to our investment processes are. There's a ton of data. We just need to roll up our sleeves and work with it and figure out how it informs our investment.
Yeah, as usual, you're right. It's annoying, isn't it? It must be annoying for people you live with, because you're quite often right. So that you're right. It's good. It's good to separate the use of the term data and from analysis, because let's say we do, and large investors will do this all the time. You'll do a sovereign risk analysis on an area that you wish to invest in, regardless, and it could be asset class agnostic, it could be just taking a tilt on the area, it could be just saying, look, we want a more exposure to, for example, in Australia, Indonesia. Maybe we'll execute that exposure through infrastructure, maybe we'll execute it through participation in equities, but we're going to look at the area as a whole. We'll collect information on that area, and what we'll understand at the end of a sort of sovereign risk analysis is the geopolitical context. We'll understand financial data at a high level. We'll understand inflation trajectory. We'll understand the role of banks and governance. We'll get comfortable around that. We will not ask for anything on whether or not half or maybe over half of the population is empowered, is able to cast a vote, is able to work, is able to, is fed, is, you know, and what might that mean pitching forward for the political stability, the productivity of that country? What does it mean to take an overexposure to Indonesia, noting the gender factors, for example? That will never be collected, and yet it is available, and it is material to an investment decision. We will have all data on inflation, all the data on inflation, yeah, because we want to see it.
There is incontrovertible data, right? This has been studied for decades, that political stability goes down when gender-based violence goes up. That is a not causal factor, but a correlation that is so fixed that it has been predicted over and over and over again. And the World Bank, in all of its data about violence that it uses to inform political risk, doesn't include gender-based data. So there is no tracking of gender-based violence in the World Bank's data about political risk. All other forms of violence, or most other forms, I actually would say other forms of racial violence and other pieces of that are also left out. Most forms of sort of social violence are left out. But in particular, this gender-based violence work is excluded. And so we're not working with a full deck. We're actually not looking at data that could actually inform and help us understand what are the trends coming up, what would the next 10 years look like as a leading indicator of political stability.
Okay, so the data is out there, you're saying. It's just not, there's no practice for accessing the appropriate data that would be required to make the kind of analysis that needs to then inform product development.
And so the people
investment decisions, like it doesn't need to be product development. These decisions are going on anyway.
Yeah. Right.
Let's say, even for example, so that's at a portfolio level where you might do like a, you know, I'm going to go into this particular region. Even if you bring it down to an asset class level, and you're saying I'm going to look at equities in the US. Am I going to have a little look at whether or not some of those companies that might be heavy tech based are using what would be considered maybe a risky social license on their surveillance activities? Are they profiting from what might be considered harm? Will that come a cropper in, sorry, that's a very Australian statement, Vicky knows that one. Will that come a cropper in my long-term investment view? That sort of thing. These are the decisions that are going on anyway. Where is the gender lens to those decisions? That's what's missing. Yeah.
So let's just change gear for a minute, because I'm conscious of time, and I did want to. Yes,
sorry, I just wanted to bring this into like a probably more of my curiosity as like a practitioner, right? So you know, we designed a women's economic empowerment bond fund with the UN over here in the US, and it was looking at global global gender equality in corporations, and we're trying to think about, we looked at it from the perspective of, okay, policies supporting a safe workplace. So that's, and the way investors sort of see it now, you probably will across, it's really is, it's in the screen, you sort of screen the companies out. It's like a yes or no, that's sort of the level of data that we have. And that's coming from Bloomberg, that's coming from, we actually buy the data with like a gender equality provider, Equileap, and they considered like, best of breed alongside Bloomberg, right? But I'm wondering, how do we take that, because I'm really loving what you guys are saying, taking it a step further, the data is there. How does the industry put that into practice and actually create a product that's doing more than just screening, that's taking it a step further, say past screening into the investment thesis? So can you guys give us some examples of that?
So
sorry to take over as moderator.
Yeah, no, and I think it's a real question, right? I mean, I'm not suggesting everything that we're all talking about is easy. We're just trying to raise the bar a little bit in what's possible, because this is doable. It's just a little hard, but heck, we're investors. We're supposed to do hard things. If it was all easy, everybody would do this, right? So I do think I want to challenge whether or not, so we wrote a paper with Tiedemann Advisors on investing, private investors investing around gender-based violence, and really sorted out this sort of difference between where we use screening as a kind of blunt instrument to say, here's my basic assumption, I'm going to screen out anything that looks like this. And obviously, there's a move in so much investment that moves much more quantitative analysis, that's sort of, more passive funds, less active. And in that, you need a screen, right? You need to say, what are the factors that are going to kick somebody out of the portfolio? But I actually think we need to step back and I'm not quite sure how to I want to find a way to not keep saying the same thing, but figure out if we can say it better, which is, it's what you did. It's what's the investment thesis, not just what's the screen, but like, what do we actually think is happening? What are we positively investing in? What kinds of companies are we trying to find? And I might lean towards more fundamental investors versus passive. And because I think a lot of the passive vehicles that are out there are using Equileap data, and they're, Equileap data is good, but it's a tick box. It's yes, no, do you have this, do you not? And most investors use Morningstar or MSCI or Sustainalytics or whoever's data they're using to then inform their own investments. And that's where you need to do that translation. What is your approach to investing? How do you do investments? And then how would analyzing gender make how you do your investments better, smarter, more impact, less less externalities, all these kinds of things. And I think that's the core of it, as opposed to saying there's some magical screen that we can all apply if we find this one thing and rule out companies. It really does need to get baked into the investment approach of the financial professionals, of like, how do you approach this? And then how can we bring gender in? I don't know, Vicky, if I answered your question. I don't think I did, actually.
No, I think, but that's the crux of what the industry is trying to do. And I actually think, and I think you did answer the question. And I obviously believe in that, like we did it sort of do it 3 layers in. We're like screen first. And that includes, I like your stuff that you were talking about, Mary, about like industries. Like we were like, okay, like, tobacco's out because there's predatory marketing in particular marketplaces that we can't, have it in a portfolio. But if you actually look at it from an investment perspective, a lot of those industries are already in stocks anyway. So they're already going to be screened from an industry criteria. And then if you take it a step further into investment, who's actually writing the IM, who's actually writing the investment memo, having the analysts actually analyze it from the factors of, what we don't want them to do is to just be like, oh, these are the rules of gender, I'm just going to follow the rules and tick the boxes. It's got to be, is this material to your investment thesis? Do you think this is a better investment or not? And why? Put that into your analysis, and training that mindset in is really, it's an entire like shift in the thinking. And it's from like every investment professional should be very capable of doing impact assessments, of doing industry analysis. It should be fundamental to how you're actually making the decision. And then we went, so we're like, okay, And then we're also going to donate a portion of our profits to a nonprofit dedicated to women's equality. But, I think it's like, I mean, every fund manager to their own, but, I think I'd love to see more. I guess that's where I asked the question. I'm like really grappling with that. I'm going, how do we, like, I would love to create a fund that was, that really focused on, domestic violence or, violence against women. It's like, I know the stats. I've got friends. I see what happens when you're in the workplace and you've been through violence, what that does to your ability to negotiate, what that does to your ability to run a company, to actually go and ask for things that you need. There are undertones that we're not talking about, and if we can how we find a way, the path, the practitioner way. That's what I'm really interested in. But I'm so fascinated by how you guys are pushing and probing, and would love to get this conversation into, I guess, more minds of fund managers.
One thing to follow up on here, and I just want to be realistic that gender analysis is a expertise, right? It's one that you've learned. It's one that Mary's learned. I look at Sarah Hill, who sort of joined HESTA, and you've got a gender expert inside of HESTA, right? Part of the challenge is we haven't valued the skill of gender analysis. We would never make a climate investment without talking to a climate scientist, but we are happy to sort of generally find a set of women and call it gender lens investing without doing a deeper analysis. And so I think there is a challenge here. And so Criterion has a whole program which we focus on translation to build that translation. There isn't a translation function in the field in the way that World Wildlife Fund and EDF and others built within climate that does the translation between gender data, gender analysis, and finance. And we need to strengthen that function because investors don't claim to be experts in every area. So they hire experts, but we need to start seeing gender expertise as expertise that you would hire and pay for versus only looking to have women's representation in finance and assume that they will speak to a gendered experience.
And I would say, Heidi, sorry, were you trying to control this? I would say that too, that and to your point too, Vicky, try not to get to the product too quickly and stay in the really uncomfortable, annoying part of the strategy for longer than you believe it to be possible. As in, when we go to product, we tend to talk in tactics. Can I constrain capital here? Can I accelerate capital based on this thesis? And I think sometimes what misses then is that you haven't seen the whole strategy through the gender analysis piece. And so encouraging people within financial institutions to not solve at a product level quite so quickly until they're quite sure what they are trying to solve at a really high level first. And then tactically work your way through the portfolio, which is what you would do for gender. For climate, one of the interesting things about climate is the concept that it is a problem of the global commons. And so, you can clean up your portfolio all you like and have no fossil fuels. You'll still run the risk of the fossil fuel burning from outside the portfolio. No good having a clean portfolio in a dirty world. Clean the world. So instead of when you rush to that, right, I'm going to screen this and tilt this way, we might lose the global commons aspect of it, and therefore the best way to make changes. So if the risk of gender inequality sits at a system level, which we believe it to, then the impact thesis is the change at the system level. And that's really difficult. And that makes people go, well, that's just not a thing I can do. But we've done it in other things. We've done it in other ways. I've been annoying Joy about the Roe v. Wade, what are corporates doing in this space? Because I'm keen to see them turn their eyes. I'm keen to see pressure on them to turn their eyes. We've had some good corporate citizens in the US talk about how they're going to help their employees get from one state to another where reproductive rights might still be legal for them to participate in. If you put together all of those good corporate citizens and they stopped looking down at their employees and instead looked up at the system that has just taken away universal healthcare for them, they could change the world. They did it when they needed changes to the financial taxation system. Why don't they do it for gender? And where is our pressure on them to do it for gender? So I think when you go down to a tactic level quickly, we might miss the system approach. And that's where some change will genuinely be felt.
So let's talk about advocacy and the role there for exacting that pressure, and how I know it can come from different angles, whether you're, you know, in a company, leading a company yourself, or if you're just an individual wanting to change the system. What kind of channels or movements exist that you would encourage the investment community to tap into, or create or get involved in somehow? Are they out there already? Surely.
There are definitely some. I want to name, back to Vicky's original story, one of the most important things that investors can do, and in particular asset owners, wealth holders, superannuation funds, one of the most important things they can do is ask the bloody question. Name that instead of Vicky walking into a room and having to rationalize that she's incorporated gender into her fund, that the first question she gets, or the second or the third, is, have you addressed this? How are you incorporate? Have you done a gender analysis on the market? Ask the question, right? And so if they don't have an answer, right, we've had sort of a set of asset owners over the last couple of years sort of doing this kind of activism, because at some basic level, the market will follow when people are asking questions. And I remember doing a workshop in Australia, maybe 3-4 years ago. Well, wow, except for COVID. So it's maybe 5 or 6 years ago now, but it was a couple years ago. And all of a sudden it went from nobody had been asking the questions to a room full of asset managers saying, people are starting to ask me about gender. I need to figure out what my strategy is. So I think particularly in Australia right now, there's a need for people just asking what feel like potentially dumb questions. And when your advisor says, I don't have an answer, to say, how much money have you spent finding an answer from me? Because if you don't have it, I would like you to account for how much you're going to invest in finding it, and demand it. The second thing is, I just think we have to build products. We just have to focus on local products in Australia that can be built out. And Mary, I know you want them slowly. I kind of want them as quickly as possible, because there's such a void in the market. We can fix the products later, but we can fight that out later.
Yeah, I know there's a lack of products here, but there is also there's no need, I guess, to invent new advocacy channels. When you're talking about what a system needs to do, you need to be at where the system levers are in your advocacy anyway. So where is for anyone listening, where is your company's approach to making a pre-budget submission to the federal parliament on why the actual budget needs to have a gendered approach in the making of decisions, not just a gender outcome sort of calculation done afterwards? Where can you actually put your desires for a gender approach in existing conversations that are going on? So as Joy mentioned, with, you know, pushing it into fund managers and anyone else in the ecosystem, and talk to power about it too. Talk to power about how this is missing analysis for you and you need it. Talk about why the GDP doesn't count women's work. You know, talk about that sort of thing, because that's material to you as an investor. So that's, I think it's not sneaky. It's just being, it's taking it to the right level, I think. Plus there is all the other ones as well. There is also, yes, there is also women on boards. There is women in, we run 40-40 visions, women in executive roles. Let's talk about the drivers to inequality in the workplace. Let's talk about childcare. Let's talk about childcare from an investment lens. Let's do it everywhere. That's the key, I think. It's everything, it's everywhere, because that's what you do with climate. That's what you do with inflation. That's what you do with interest rate risk. Talk about it like that.
So many brilliant call to actions there. Are there any other takeaways as we wrap up this talk today that you'd like to leave our audience with? Vicky, anything in particular?
Yeah, I think sort of blending with the last question as well. I think the biggest thing my takeaway is that every single person matters. Every single person counts. Like my parents are refugees. Like, I'm not supposed to be on this call. I was supposed to be born in East Timor, right? You know, wouldn't have had an education. I got the genetic thing. I got the lottery because I got to be born in Australia because of the wars, right? So I think for me, I always sort of felt like I was not supposed to be in the room. And even now I'm like the youngest, you know, the youngest partner, like, you know, one of two females sort of sitting at the table in my firm. I was the only female in my co-founding team of my edtech startup. I'm still in all rooms, not just as a female, not just gender-wise, but also, you know, my ethnicity, right? There's so many things, so many ways in which I felt like I was inadequate, or I didn't have a voice. But every time I felt that I you know, leant in and I was courageous out of my comfort zone, something yielded from it, whether one person changed or the seed was planted. And so I think if I could give, you know, one takeaway, you know, for this call is take it from someone who didn't come from much and, you know, has been in the room with the UN and, you know, has seen, you know, sitting here talking to, like, you know, Mary Delahunty and you know, talking to Joy Anderson from Criterion, like these people have been leading the genderless front. I just want to say, like, lean into your power, considering that's, you know, that's our, you know, call to action here. Lean into your own power so that you can empower others around you and you can help to change the system in your own way.
I want to double click on that and where you went. That was just incredible, Vicky. And it brings me back to Mary, you just talking about at the beginning that there's bias, like you just flat out, there's bias in the world, right? And so I would just ask anybody listening on this call, the next time you're in a room and you're wondering, might people become uncomfortable if I bring up an issue of gender, and might I ruffle some feathers? I don't know. I want to remember stories like Vicky and everybody else of people who took way bigger risks to raise the issue and to push things forward than most. So I want us to reassess how much power we have in some of these conversations, because if we're continuing to chicken out of naming the question, we're making it harder for it can be challenging. People will push back. People will belittle you. People will say, oh, sweetie, that's not how it works. You don't understand it. But then you just push again. And at some point, that's what it's going to take, as opposed to waiting for somebody else who we think might have more power and could do it. I was a high school teacher 20 years ago. Like, I'm with you on the Vicky. I wasn't supposed to be doing this. I don't have a day of training in finance. I don't care. Shit's got to get fixed.
Well, neither do I. I was a musician 5 years ago, and now I've taken a left turn too. So I think that's a great note to end on. The possibilities are endless. And I just wanted to thank everyone for being involved in this webinar. The speakers, of course, I've loved every minute of it, especially because you started moderating yourself towards the end there, which is, I could have just sat back and put my feet up and listened to it for hours. So thank you. And thank you to DFAT for sponsoring this whole partnership. And you know, Ecotone partners, we're very thrilled to be part of doing this important work and getting investors to question what their power is in every situation they find themselves in, and how they can advocate for change in ways that are surprising probably to themselves. And I found this conversation very thought-provoking, so I hope you did too. And I hope you can tune in for our last two sessions for our webinar program. We've just got 2 more left. The next one is about the intersection of gender and climate and how they're inextricably linked. And the final webinar is about showcasing 5 really interesting high impact gender and climate investment opportunities that DFAT have been working with in the Asia Pacific region. So thanks all, and hope you have a great week. See ya.